Good morning, everyone, and welcome to the European crossover webinar. And we did see the big mover of the, I guess you call I guess let's say the session was the dollar yen here. Let's go and take a look at this. I actually posted some charts of the basic nickel in the Asian session, and that's what I'm going to be doing going forward. I'll be posting some charts in the Asian session for what happens to be moving at the time. I also posted some news. Obviously, we had some news coming across about the Bank of Japan, but we posted this. This said, dollar yen finds buyers at the bias chart support of 914. That was actually to the pip. That was our bias chart support at 914, resulting in a strong rally. Resistance is 968, confluence with 973, which is a 78% of 914 to 989. We'll go and take a look here at that dollar yen here, and you can see here we had on our bias chart support from yesterday was 914 right here, and that was actually surprisingly that was the actually low pip of the day, 914. And then from there, we took off in quite the sprint. Actually, I was in the room when I was talking to, posted to the guys, 968 being a resistance and then 973 being the 78%. Well, they actually made here, right up here to this trudge here, you see here, coming across 978. They jumped up real quick shortly thereafter. And then since then, we've paired back here on the dollar yen. Just looking quickly on that. Just a quick cover on that. We're going to say, okay, let's see here. Because that was important on the Bank of Japan news. So hang on real quickly. I did want to go on and cover that. That was a big mover of the session. So let's go and pull that up quickly. The Bank of Japan cuts inflation view and keeps the stimulus as risk to the economy heightened. The Bank of Japan cut its inflation forecast on Wednesday and warned of rising risk to the economy from faltering global demand, further pushing back policymakers' years-long efforts to foster durable growth. Also, at the time, I posted some headlines in the Asian session from Fitch. They were saying, hey, look, it doesn't look good. And he was even looking at super long trends about, employment and saying the age, dealing with even age issues. So really looks like really had the opportunity for the yen maybe to, not turn around and come right back down, despite what we've seen here in the S&Ps, which obviously led the dollar yen down to that 914. But we quickly bounced back with this Bank of Japan outlook. But it says it's widely expected the Bank of Japan retains its ultra-easy monetary policy settings and its policy views, leaving the Japan some way off from exiting a sweeping stimulus program beginning in 2019. The central bank has maintained its views that Japan's economy, the world's third largest, will continue to expand at a modest pace. Yet the rising pressure on global growth from a trade war between the U.S. and China, Japan's biggest trading partners, has many analysts wary about the outlook. Japan's outlook is economy is likely to continue on an expanding trend through fiscal 2020, the central bank said. Overseas economies are expected to continue growing firmly on the whole, although various developments of the late warrant attention, such as the trade friction between the U.S. and China. The BOJ warned domestic economy faces risk on several fronts, including protectionism, Brexit, and U.S. economic policy. Such downside risks concerning overseas economies are likely to heighten recently, and it also is necessary to pay close attention to their impact on firms and household sentiment in Japan. Moreover, the IMF trimmed its global growth forecast, and the survey showed increasing pessimism. With stubbornly weak inflation forcing to retain its massive stimulus longer than expected, the BOJ took steps in July to make some changes to the policy framework, such as allowing bond yields to move more flexibly around its target. In an outlook report issued on Wednesday, the BOJ's 9-member board analyzed Japan's economy, including fresh growth and inflation projections for the year of 2021. The BOJ cut its forecast of core inflation to 0.9 in the fiscal year beginning in April from 1.4%, reflecting slumping oil prices and the potential fallout from slowing global growth. Well, that certainly allowed the dollar yen to go on and jump right back, as we were indicating here. Saw this move jump all the way back in here, but we indicated, like I said, 968 being resistance and 973 being the 78%. And you can see we paired back, not a whole lot, because once again, like I said, that kind of changes the tune a bit here, which probably isn't surprising, but still that BOJ pushed this already back to what was already a surprise from the prior week, as we were able to get above that 923. So we posted that here in the Asian session, along with a couple of charts also here on gold. We'll take a look at that here. We'll get like about 2 or 3, depending, as I mentioned on the in the chat room, depending on the volatility. Here we're looking here. Gold has generated a 30-minute buy signal via the exponential moving averages. Upside target is 1289, which is a 61%. We'll take a look here on that gold. So you can see here with the exponential moving average, we got this buy signal. It stayed in effect even though we took this dip here. The EMAs are still pushing that buy signal. So although we have resistance here, right here, 1286, the upside target, if we can push a little bit further, we can see the dollar maybe weaken a little bit, which the dollar is, it's not weak, but it's, edging off its highs. We'd be looking for an upside target around 1289. That's on the 30-minute gold here. And lastly here on the euro, after yielding a hammer bottom on the 30-minute in the U.S. session at bias chart support level of 1340, the euro is opening itself for a rebound. Initial level going into the European trading session will be 1389. We'll go back here into the you can see here, we get this 30-minute hammer yesterday. We were talking about that as we had our bias chart support yesterday, which had remained. Remember, we kept it in place, which was, look, 1341. We did drop as low as 1336. And then from there, we continue to work a little bit higher. Well, the upside, if we're going to go and push, and we know that there's probably a bit of a downside drag because of the ECB coming up. But if we were to push a little bit higher, it'd be right here at 1389. We'd be looking up here. Now, obviously, what some people are thinking is that we're a little bit oversold here. Not oversold, but we're diverging a bit despite the pull of the ECB. So, we may get a rally afterwards. We shall see. But if we are going to work hard off of this 30-minute hammer, and the resulting action, although we came up here, we pulled back a bit. I'm surprised we weren't able to push a little bit higher, maybe squeak some stops, and at least made it up into the 80s. But the upside move on this move, and you can see we're still in a buy mode, although get a little bit almost acting like we want to roll over right here, would be up here at 1389. Okay. Looking across, we have cable moving higher now, pushing higher. I think yesterday we had our resistance at 29.24, which was keeping the market in check. And we actually dipped back down a bit, but we've since continued to push a little bit higher. And with that, we're going to move into the morning bid. Let's go over that. So we set up the morning news. Oh, there was that BOJ. So there it was over here. Okay, Britain's opposition Labour Party is highly unlikely next week to back an amendment by lawmaker Yvette Cooper that could prevent a no-deal Brexit. John McConnell, the party's number 2, said this morning, combined with the signs that a number of conservative lawmakers will back a vote scheduled next Tuesday, could force Theresa May to ask the EU for an extension of Article 50. While Brussels is loath to protract the period of uncertainty, it also has said it's open to a delay in certain circumstances, and it too is above all keen to avoid a no deal. An eagerly anticipated EU report is due today, and controversial so-called visa for sale scheme schemes under which member states sell passports and residency permits to wealthy foreign citizens. Campaigners and lawmakers warn they pose money laundering and corruption risks, all the more so given that a passport issued by, say, Malta gives you the right to move around all the states in the EU's border-free zone. There have been a lot of stayaways from this year's Davos. One world leader that is turning up is German Chancellor Angela Merkel. She is due to make a keynote speech to the event this afternoon. Her audience will want to know what she has to say in the range of subjects from transatlantic tensions to Brexit. And on the markets, after Wall Street's late start to the week saw benchmark stocks record their second biggest loss of the year. So far on Tuesday, it's been calmer so far today in world markets, even if the news flow on the U.S.-China trade, global economic soundings from the U.S. housing to Japan's export data is also on the Bank of Japan's latest inflation outlook remain dour. Reports of a failed attempt to get into the trade talks between Washington and Beijing moving this week before high-level meetings on January 29th. A restatement by U.S. trade advisors of Trump's hardline stance on China need to shift on the structural issues and keep trade tensions high. Shanghai and Hong Kong stocks ended little change, however, after heavy losses. Japan's Nikkei ended slightly in the red, with South Korea's Kospi outperforming. U.S. stock futures were flat after Tuesday's slide with below forecast home sales numbers for December and mixed earnings season so far, adding to the trade angst. U.S. Treasury yields and the dollar index steadied after Tuesday's retreat in both. Euro dollar was firmer ahead of tomorrow's ECB, but European stocks opened lower as incoming corporate earnings disappointed. And looking ahead, let's see, we'll go on and just take a quick look on here for the French consumer confidence. Came in pretty much in line. And we do have Canadian retail sales at 8:30 Eastern. So let's quickly go on and news is very slight, as we've already covered. New Zealand dollar bounces as bears outfoxed by inflation. The New Zealand dollar bounced smartly on Wednesday after inflation data proved not nearly as soft as some bears have been wagering on, prompting a round of hurried short covering. The Kiwi popped up to 67.71. And instead, the consumer price index top forecast with a quarterly rise of 0.1 to keep annual inflation steady at 1.9. Crucially, a measure of non-tradable inflation favored by the RBNZ rose a surprisingly strong 0.7 in the quarter. Core inflation is solid because of persistent and generally sticky areas of inflation, such as prices for housing and household utilities. For rates and currency market trades, there was no smoking gun. There's a definitive evidence to justify rate cuts priced in the Kiwi and rate cuts. So it says no definitive evidence. That doesn't mean the cuts will or should be removed. Risks are plenty. And moving on to the Aussie, looking at the New Zealand dollar and CPI components, the map across the Australian CPI suggests some upside risk. For core inflation, we're lifting our trend mean CPI expectations to 0.4 from a range of 3 to 4.4. The NEB expects headline index rose 0.3 in the fourth quarter. And just to wrap up real quickly, the yen weakens in Asian trade. Aussie and Kiwi dollar strengthen. Safe haven yen fell versus its peers as risk appetite marginally improved in Asian trading. Currency markets have whipsawed over the recent weeks as traders tried to come to terms with a range of issues from Brexit to slowing growth to the outlook for central banks. And a report by the Financial Times that the U.S. had rejected China's offer for preparatory trade talks dampened the risk sentiment overnight. The dollar index was marginally higher at 96.32. We just saw it at 96.29. Sterling is sitting close to its highs last seen in mid-November, a sign that traders expect Britain to avoid a chaotic exit from the European Union. Prime Minister May's divorce deal with the EU was rejected by lawmakers last week in the biggest defeat in modern British history, and lawmakers have been trying to plot a course out on the crisis, yet no option support from Parliament. The market is now completely discounting the prospect of a hard Brexit, though the political risk still remains in play and volatility is certainly to ratchet higher. And lastly, with gold, disappointing macro fundamentals and a certain surge in uncertainty surrounding the U.S. talks have many investors shunning riskier assets. Disappointing economic data from the U.S. and Japan added to the sense of an overall slowdown. U.S. home sales tumbled to their lowest in 3 years in December. and steady moves in the dollar. Even dovish comments for the Fed and disappointing macroeconomic data is restricting gold's movements besides its inability to break above the resistance of 1300. So with that, we'll move on to the bias chart. Let's get started here. I think we've got a lay of the land so far. And then we'll move in here to the euro dollar. So we had 1341 as our bias chart support here for the euro from yesterday, and that held just fine. When we take a look at it here in the Asian session where I posted those charts, we're actually looking here on the 30-minute, and you can see here that we had that hammer bottom here, and we kind of generated a buy signal, which we were sharing in Asia, and has opened the door for the market to continue to move higher. But one thing that the markets quite often will like to do is, in this case, which has pretty much been the same each time, which is, let the market ease back into ECB, despite some outlooks. I mean, I just don't see where Draghi would necessarily be given the idea that they have to raise anytime soon. We shall see, but the play would then be to, sell into the ECB, although we may get a different type of bounce afterwards. But with the chart that we posted in the Asian session, we did get this buy signal, and if we're to push higher, resistance is going to come in. And actually, we're looking at right here, 1389. They have some resistance here. I'm a bit surprised, but like I said, that's because of the ECB. They weren't at least able to come up here and push these stops here. So it really opens the door for them to lean a little bit into the ECB. But we are still, as some people have noted and we mentioned earlier, some people starting to see some divergence with the euro in light of, you would think that going to the ECB and the way that we've kind of failed over the last week and a half or so, the market would actually already be taking that next step lower. So we're kind of holding our own. And actually, until this breaks, for the third day in a row, we're going to go on and keep our bias chart support here at 1341. Upside, we have at 1405, 1422. We may have to go in and lower that a bit. Let's move here into the 2-hour chart. We're languishing here. Here's the 1416. So going with what we talked about in the Asian session here, says after yielding a hammer bottom on the 30-minute in the U.S. session at its bias chart support level of 1340, the euro is opening itself for a rebound. Initial key level going into the European trading will be 1389. Well, like I said, I thought we might be able to squeeze a little bit higher. We didn't. But I tell you what, we're going to use that as our resistance, basically almost like a pivot if we were to push higher. So we're going to tighten it up a little bit, especially as we go into ECB. For now, the market may have a hard time justifying that it would move higher unless we get some kind of a crazy headline. So you're looking right now for today, the risk level on the upside, target on that 30-minute exponential moving average buy signal would be the 1389. So we're keeping it pretty tight so far, and until we falter here, 1341, which has been the bias chart support for the last now 3 days, which would include today, we're going to keep that there. Let's go and move on now to the cable. Well, we are pushing higher here now on cable, and we're actually up here back to this 2987. Let's go and take a little bit closer look here. Looking on a daily, we'd be looking at, wow, golly, that'd be jumping all the way up here at 30.99. But so let's go and move into a 2-hour for a little bit closer look. Well, for now, that's going to be the resistance. Now, one of the things that we started out the week was saying is that, we had come into, let's go back in here. We go into the daily. We said how the market was we had moved towards a buy mode. Now you can see that with the exponential moving averages here, and that you'd be looking to buy this, although on a short-term basis, and we had referenced the weekly chart. Remember, we got this long-legged doji. That would open the door for us to pair back. And pair back we did. We came down here into this 28, 20-ish right here. And since then, the market has stepped in. So we started out the week a little bit on the defensive side. And then from there, we've continued to work higher. But as I said, you look on the exponential moving averages, we'd already generated a buy signal. And that momentum is continuing to push us higher now. And so for the resistance for today, if they do get this push, and that seems like a bit of a ways away, but it just might knock out some shorts here. I don't like it being this far away, not that far away, but if we get past here, we're really going to boost some stops here, but it's going to be 30.52. That'll be our bias chart resistance for today. Certainly bullish. And let's take a look here for support. It's going to come right there, 29.24. We can see we got this on the exponential on the 30-minute. We generated this buy signal. We'll go with 29.24 here. And that may just be, yep, 29.24. Actually, if you remember, that was actually our resistance from yesterday. So as it says, the story goes, what was once resistance now becomes support. And it was holding pretty well at the time. Two challenges came up for the third time. It was just holding up there. We'll go and take a look at the Aussie dollar now. So we had our buy chart support at 71.06 with resistance at 71.59. Well, we did make a dip down here to what, 71.16. Probably maybe a little bit of a sympathy support from its sister, the Kiwi. We're going to go on and keep this 71.06 for right now. You can see it right there. And on the upside, we had 71.59. I think that we're going to go and keep the same right here on the Aussie. 71.59 here. So that's going to remain the same. We'll go on and take a look here now on the Kiwi. We got a smart rebound here. Smart rebound indeed off from the Kiwi off that that news. So a moment. Resistance will come in right there, 6803. 6803 for today's bias chart resistance. And the news, the CPI was a surprise to everyone. So certainly pushed this back up, but it was saying, hey, the risks still abound. Doesn't mean rate cuts are off the table. Blah blah blah. But it was certainly a surprise. It referenced housing expenses as one of the key ingredients that was able to go and push those inflation figures. Now, as far as support. They'll be looking to go and provide that support on any dips back down here. And that's going to come here at 67, right there, 67.36, 67.36. Let's go move into the dollar CAD. Well, we had a nice little rebound here so far in the dollar CAD. Now we had a resistance here at the 38%, which is 33.66, I believe from yesterday. Right, yeah, right there, 33.66 with the low of 33.07. Now, here's that key level again, 33.14. And we said yesterday, we thought about this. Remember how well 33.14 has been holding this market? We said, well, you know, it's pretty obvious where the resistance is. 33.4 support would be 33.14, but we gave it a little bit of extra room here. Hence, we came up right here with 33.07. I don't see a change there because if they want to come down here and test it, they'll probably, you know, push the stops a little bit lower. Once again, it's going to be 33.14. There you go, 33.14. So we're going to keep that, keep the same bias chart resistance, 33.65. Same bias chart support, 33.07 here with the dollar CAD. On a short-term basis, we did generate a sell signal on the 30-minute right here. So we may be able to go and test down there to that 14 and push a little bit lower. Moving on forward, we'll go straight to the dollar Swiss. Boy, this thing has really continued to maintain its strength. We don't know that the SMB had headlines last week, and that added up to the upside too. They pretty much said, hey, we don't care what anybody else is doing, including the ECB. We're going to do our own thing. Essentially, that was the gist of it. And henceforth, we've seen the dollar strengthen against the Swiss franc. And look at this. Boy, it's held up here at this level. We actually had our bias chart resistance, remember, 99.89. And that continues to go on and hold, 99.88, okay? And you can see this coming across. So no changes there, 99.88. Although I will say this, remember we'd hit just below that, I think it was at 72, we'd hit a a fib. And we were expecting the market to kind of pause. I believe it's 99.72 if I remember. Let's take a look at this. Yeah, we hit the 61% right here at 99.71, 99.70. And we're expecting the market to pause a little bit, but pause a little bit, it has not. Hang on. But we're going to go and keep that 99.80. as our bias chart resistance. And you see it coming right across there. We'll actually highlight that. There we go. 99.88. And we said if this thing rotates lower, we're looking for 99.23. And we're going to go and keep that. No changes there. 99.23. Let's go move into the dollar yen. Well, from yesterday, we had our bias chart support at 914. And that was actually the low here on the dollar yen. We're going to move into the 30-minute. As I noted, I posted this in the Asian session. I'll be starting to post a few charts in the Asian session for those markets that are moving. Like I said, depends on volatility. We post either 2 or 3, could be more if we have these markets moving a little bit more. Euro's been definitively quiet ahead of the EC, obviously with the ECB, and it's been trapped in a tighter range. Obviously, the big mover overnight was the dollar yen. Now we had, as I mentioned before, we had yesterday we had our bias chart support for 914. This is exactly where the market went to, 914. And then we saw this strong rebound going ahead of the BOJ, and strong rebound it was. Now I was posting, as we made this run up in here, I posted into the room, we had resistance at 968 with 973 being the 78%. I had also shared some headlines out of Fitch saying that, and they've got some real bad, not that this is news, but it was focusing or highlighting more on the structural issues it's dealing with employment too, looking out. But we also had a level coming up right there. You see that? Right there, coming at 99.78. There we go. Since then we paired back, and this is a decent area coming into this short area here. This now it's showing 70, but I had that listed at 68 with the resistance at 70, which made sense for a target. Before we even got there, I posted this. It made sense for a target and posted the chart. And then since forth we backed down, not a whole lot, but decent background. Certainly nothing compared to the run that we saw here off of those lows from yesterday that we were looking at. Let's take a look here. So where support? Well, resistance is going to be, we're going to keep this 973. We'll use this as resistance for now. Just tighten that up a bit. But with the outlook the BOJ has, it's certainly going to keep the upside momentum open. So this is actually, you see right here, this level here, that's actually, well, it's 972.73. So we're going to keep that there. It's a 73. But it really opens the door for them to even push higher. Okay, so we're just keeping it relatively tight for right now at 973. But really opens the door for them to, if they wanted to continue to move higher. I guess what will be the telltale probably will be, to a certain extent, was going to be, equities themselves, U.S. equities. Let's go and take a look for support. Well, support is going to come in right there on a short-term basis, 941. We'll mark that off. Tighten in our levels for today. Looking at the bias chart here for the dollar index yesterday, remember we've kept this pretty much in check too. 96.51 and 96.08. One of the things we referenced yesterday is, hey, before you get to 96.08, we think we're going to go and find some scalp support at 96.18. Well, it didn't quite make it down there to 96.18, made a move towards that direction, but we didn't make it down there. We got as low as what? Well, pretty close in 96.22. We're looking for support at 96.18. Bias chart, or not bias chart, bias chart support remained the same at that old pivot 96.08. But we're looking for some scalp support right there. You can see it 96.18. We made it to 96.22, and this market just kind of stuttered and sat there for the most part. Not even that big a move if you think about it in light of what we saw with the dollar yen. So the upside resistance is still going to remain the same, 96.51. We're going to go and keep that there because moving it here isn't going to make too much sense. They can quickly move up there, and still the door's open, especially if the euro slides going into ECB. So 96.51 is going to be our bias chart resistance. We're not going to change anything. I want to go and keep 96.08 as our bias chart support. We're looking at here on the 2 hour here. Let's go and take a look here on the 30-minute. Well, as we move around and you get in a tight little range, you get some mixed signals right here in a situation like this. Now we did get, if you look at it here, we got a nice little gravestone doji here, and from there we're able to go in and pair back. That gravestone doji came right as we talked about the 96.51 and had eased back from them, but we haven't seen any move lower. I wouldn't necessarily expect that as we go into ECB because the year is most likely to be under pressure unless we get some type of a headline out of nowhere. So for the dollar index, we're going to go and keep that in check also. Same bias chart resistance, same bias chart support. Let's go and move into gold. Well, we posted this in the room in the Asian session. As I mentioned, I'll be posting some charts in the Asian session, and we actually generated a buy signal here on the gold. Like I said, I like to focus on the 30-minute. For me, the long term for me is going to be 2 hour charts. I don't use a 4 hour, although I do on the bonds, but most of my focus is very, very short-term trading, a lot of, just scalping, and really not for big areas. I just try and find areas where I'm looking at for levels and fibs and try and get a momentum. I try and, play on both sides. I'm not in it for very long, and it seems like when I try and do something different or deviate from that, I get myself in a little bit of trouble. So I feel more comfortable just trying to, when I see some good movement, try and move back and forth. So I use these 30-minute exponential moving averages just to give me an indication where the momentum is pushing or allowing the market to go to. So you can see here that we've generated this buy signal. So even though we fell back here, because remember we'd already had worked lower as the gold's inability to break above 1300. So we broke back down here, but you can see here the exponential moving average was still on the buy mode here. So we had a nice little recovery. Well, since then, the market's continued to move higher from where we were even in Asia. We've pushed higher to come into this 1286. The upside, if we're going to see the dollar falter, that might be a little bit tough going into ECB. Once we got up ECB, maybe we'll see things differently. But on a very short-term basis, then the upside target on this move off of that doesn't mean we'll make it all the way there. We certainly have a good, strong area right here at the 1286 that you can see that coming across here. Good strong level, and the market eased back. But if it gives one more push up here, that target will be 1289 to 61%. You can see that coming across a little bit of a good area of fight between these markets here, right here. So it's going to be 1289 on a short-term basis. Support, well, support's going to come in right there for right now. There we go. Let's just go 1280. Now let's go move into the bonds. Now we had our bias chart support here at 45.11. That probably might have been a little bit too conservative if you think about that, how far the equities had run. If we saw a bit of a pair back from that run, so probably the 45.11 might have been too close. And I can see where I came in right there at 45.11, but we actually made it up in here to the 16 area here. You can see actually made it up here to 17. We'll give it a little bit more room. If we do see a continued pullback, and we've already seen a pretty good pullback in equity, so we're just going to move it just a spit away. 45.19 on the 30-year bond, rolling into today. Support will keep it pretty simple. Now on the bonds, I do look at it on a 4-hour chart. Keeping it pretty simple here. Support is going to come in right there at 44.26. Now let's go move into the bunds. Wow, pretty good sizable move in the bunds. They did come up to that next level. I'll give them that. But wow, big move. Continue to stay just above the 64.10 as they go back and forth. We want to see how this thing holds up. Let's go move back in here, actually into the 2-hour chart. So we came up to this level and they stop right here at the 64.39. When we look at resistance, so from here after that, wow, what a pretty big, well, actually not for bunds, not a big sell-off. But on a short-term basis, let's take a look at it here on a 30-minute. And if you look here on a 30-minute, look how they've been on a buy mode here throughout this entire time. And we're now have just shifted into a sell mode just now. So this market could be a little bit on the defensive. But it's been in a buy mode for a few days here. And we're able to take out these highs and then pull back, pretty decent pullback here. So resistance on a very short-term basis is going to come in right there at 64.24. And here's that breakout area, 64.10, trying to make this hold here. They've already had a pretty decent fall, although right now on a short-term basis via the 30-minute EMAs, and you can see where they generated this sell signal from here, and we stayed there the entire time until we got here, and then we've had a pretty good run all the way through. We've now generated back probably a little bit of we're still open to where we can push a little bit lower, but we're holding the 64.10, which is key. So if you're looking at that on the downside risk, it'd be, well, right there, 64 even. 64 even, so that's going to be our bias chart support for this morning. And from there, let's go move into the DAX. We had 10,040 as our support. We did come down here as low as 10,011. I'm not even sure where they're going to find the upside on here. You can see where resistance would come in right there. 11,121. But let's say that just touches just below that right there. If they want to goose those stops, it's going to be 11,134. 11,134 on the bun. So we're going to open the door for them to test here and just push a little bit higher. I'm not finding anything here. Well, we're going to keep it pretty tight. If it cracks this, we're going to almost use it as a pivot for them to move down here to 972. So on a short-term basis, support's going to be right there at 11,021. Kind of middle of nowhere land. Still in the sell mode here in the 30-minute EMAs. Your dollar just hanging around here ahead of ECB day. Same thing with gold and the cash dollar index. No real big movement here at 96.30. We're just kind of dragging along until ECB day. It would appear the big mover was overnight was certainly the dollar yen. And like I said, with the BOJ's outlook, certainly really opens the door that this could, even though we have some trouble in here, it probably makes the most sense unless we see a huge pullback in equities. This market's going to be looking to defend and buy on the dips. But that's what we have here. Thanks for joining us here on the European crossover. I'll get this posted in the room, and good luck trading today.